I'm proud to say that in 2023, we cut costs by 45% year over year and managed to ship product faster with a lean team. This led to $95 million of positive net income for 2023, $964 million in positive adjusted EBITDA, and total revenue of $3.1 billion. Crypto trading has been a major revenue driver for the industry, and Coinbase is the leader in spot trading in the US. But I'm happy to report that in 2023, we've now launched derivatives trading globally. In Q2, we launched Coinbase International Exchange, which offers derivatives trading to non-US customers. And in Q4, we launched Coinbase Financial Markets, which offers regulated futures trading in the US. Most of the world's capital is held in institutions. And in 2023, we also meaningfully improved our institutional trading products with Coinbase Prime. We even played a key role in the approval of the Bitcoin ETFs, as Coinbase was selected as the custodian in 8 of 11. We're earning revenue not just on custody, but also on trading and financing. We've already seen great demand as Bitcoin is now the second largest ETF commodity in the US, surpassing silver. In 2023, we launched our own Layer 2 solution called Base. This will help blockchains scale to 1 billion or more users, bringing down transaction costs and confirmation times, similar to the internet going from dial-up to broadband. We made it easier to find and use decentralized applications or dApps. For instance, with one tap, you can now open a dApp and you're already signed in and you have your wallet connected. There's no sign-up process for each app or having to type your credit card details into each app.
Q4 began with lower levels of crypto prices and volatility, but we saw those increase. These increases were largely driven by excitement around Bitcoin ETF approvals and broader market expectations for an improved macroeconomic condition in 2024. The increase in volatility had a meaningful impact on our transaction revenue. We saw strong growth and re-engagement from both simple and advanced traders. Overall, Q1 is off to a strong start. Through February 13th, transaction revenue was approximately $320 million. This is about 6 weeks of the 12-week quarter. We are seeing strong trends across simple, advanced, and institutional trading. Thematically, it looks similar to Q4.
We continue to see progress in the early stages of our enforcement litigation with the SEC. This is still a very early stage of the case, but we strongly believe that we are right as a matter of law, and we are grateful to see the court's careful attention to this matter and deep understanding of the issues at the oral argument. The motion is under submission, and the court did not specify any timeline for decision. Whether the case goes to trial or is dismissed, we will get the clarity we have long sought. We are confident in the outcome, whether it comes later or it comes sooner, because we are right on the facts and right on the law.
All of our insiders, myself, Brian, Emily, Paul, those on the phone, and all of our insiders, we all share long-term conviction in Coinbase. Equity is a significant component of the compensation that we offered insiders and employees alike. It's important to note that these sales account for a small portion of insiders' total holdings in Coinbase. Nobody is trading based on real-time stock price movements, company news. All of our trading plans are required to be set up well in advance. But I just want to close. We are all holding long-term conviction in the opportunities at Coinbase.
Well, I definitely agree it's an undervalued long-term opportunity, and I think we have a strong disproportionate advantage in the market. And we are now one of the most active investors in the space with more than 400 investments in our portfolio.
Sure. As Brian said, we are early days in derivatives. We're excited about the progress, but we are just getting started. As such, our current goal is to really gain market share. We are offering tiered pricing over time, but right now it's going to be competitive to build liquidity and attract users, and we'll experiment and adjust as we scale. Since we went public, we've received a question on fee rate and fee rate compression or cannibalization every quarter. And we have yet to see that phenomenon on our platform. And we have yet to see that as a result of the ETFs as well. As we shared, even in quarter to date Q1, we've seen net inflows across both retail and institutional, and we have not seen any shift in our customer behavior as a result of the ETFs. All we've seen is ETFs being a net add to the industry, net positive for Coinbase, net positive for the industry overall, with more engagement across the board with both our retail and institutional clients. We've shared over time, we agree with you with the thesis that as you see commoditization, you should see fees come down, but we do not see that today, and we continue to see customers choose Coinbase for the breadth of our product offering, the security of our platform, and we think that that will continue to persist for some time.
The entire industry, we've seen about $4 billion of net inflows since the Bitcoin ETFs launched. The thing to remember here is we want crypto to really update the global financial system. So that means we need to get it integrated into more and more parts of the financial system. We want fees to come down, make it lower friction for people to get into crypto through all kinds of different vehicles. ETFs are a massive way to get more capital to come in. So far, we have not seen any cannibalization, as Alicia said. It's been additive for Coinbase, and we're seeing elevated engagement and net inflows on both retail and institutional Q1 to date. So in my view, the ETFs are just a totally positive thing. And the more institutions that kind of get their feet wet with crypto, whether it's through an ETF or any other way, the better, because they're eventually going to be using it in other ways, holding it on their balance sheet, paying their vendors, doing payroll. We want crypto to power more and more of global GDP, and we've got to get this happening through every opportunity we can. So the ETFs are incredibly positive, I think, for our business.